former Dallas Fed president, Barclays senior advisor, and CNBC contributor. Where are you on this? I mean, I think Steve's kind of, well, everybody's right to some extent. You do want people that had really illustrious careers, and if it's in finance, that means you probably got some money, and it's probably, do you want them not trading just so that there's not the slightest hint of conflict? Richard, is that what you'd do?
Look, I went through this as well, and so did Bill Dudley. We were supposedly, and we were actually, the two richest Federal Reserve Bank presidents. Every time any change in our portfolio was reported, we got a rush of press, and then it disappeared. Now, Kaplan is a successful investor, financier, and I don't think we should hold him negatively here or have any inference of anything nefarious. There are very strict rules at the Dallas Fed, and there are very strict rules within the Federal Reserve System. I know Rob like a brother. He's a man of enormous integrity. And as Steve pointed out, he was talking against his own book, if anything. So I don't think this is a big deal. And I'm grateful that we were able to find someone like Rob Kaplan, a distinguished man, great integrity, enormous financial knowledge, to succeed me. And I place him at a higher order than I place myself in terms of understanding the financial world. So I think this will blow off over time. It is the Federal Reserve. You want financial experts there. You also want people who are market experts, which there aren't very many on the FOMC, except for the chairman and Kaplan. These two guys grew up in the world of finance. I like to see that balance against the academics, and I'm grateful he's there. Yeah, what else can I say?
No, I don't need to say anything else about this, I don't think. I do need to ask you to comment on, it's a big piece in the Journal about how the Delta variant really threw a wrench in the works for everybody's hope for a big fall boost in the economy, and we saw the jobs report. And yet we still have a lot of people saying, unless you think transitory means 2 years, inflation is not, transitory is not going to be, or inflation is not going to be transitory. So these are two opposing forces that we see. Which should we be putting more reliance on or paying more attention to, the inflation or the weakness in the economy?
Look, Joe, we have an imbalance between supply and demand. We have increasing demand. We have bottlenecks on supply. This will not be alleviated in a short-term period. Whether you're looking at the port activities in Los Angeles and that part where everything comes into our country from Asia, or on the eastern seaboard, these pressures are more sustained, I believe, and it won't just go away overnight. Look at, as Steve Leisman and I and others like to look at, the National Federation of Independent Business surveys. You look at the last one, half of those looking for employees in this critical part of our economy, half of those looking for employees cannot find them. So we're having real pressure in the service sector here. To me, that's not purely COVID related, although clearly this is a setback in terms of business travel and getting people back in the office, et cetera. I think we're exaggerating COVID-D versus the other issues here that are creating price pressures that I don't believe will easily go away and likely to be sustained for a while.
You know,
by the way, we're only going to be here for a certain amount of period. The question is how long? And I do think this is a real dilemma for the Federal Reserve and the FOMC.
Shepard Smith here. Thanks for watching CNBC on YouTube.